Morning, good morning, good morning. Welcome to today's morning blast with myself and Mr. Michael Brown. It's Thursday, the 13th of March. Before we get underway, I better get the legals out of the way before I get a tap on the shoulder. As usual, nothing discussed in this space is better than constitute trading or investment advice or infers any kind of endorsement by PIQ Global Limited, traders PIQ or PIQ Suite, or that of the hosts, which, as you know by now, is Mr. Michael Brown and myself, Mr. Ryan Paisley. Good morning, Mr. Michael Brown.
Very good morning, Ryan. Good morning, everyone, from the sauna that is Pepperstone Towers once again.
Oh, no aircon.
Mate, honestly, I'm starting to worry. If anyone is in the square mile today, can you come around with 50p for the electricity meter, please?
You know what?
At least,
For
at
some
least I might
reason,
lose a bit of weight working in this office at this rate.
yeah,
But
no, I hate to say it, but for some reason, just knowing that you're in an uncomfortable position makes me feel so happy.
oh, mate, you've got no idea. You've got no idea. And I'll tell you this for free: a dress shirt and jeans is not an outfit that's going to keep you cool. I'll let you into a secret there.
Mr. Michael Brown is all clammy. Uh,
Oh, gonna be. I might have to break out the old short trousers tomorrow, and no one wants to see that.
love it, love it, Mr. Brown's knees in HD.
Oh no! Shall we move on?
I think we better.
We probably should. Good morning, everyone. On to slightly more serious matters, other than the soaring temperature in this office. We did have actually a positive day in terms of the equity space yesterday. You may sense the surprise in my voice, and that's because it's become something of a rare event recently. Both the S&P 500 and the Nasdaq 100 notching their first daily advances in three. The S&P adding about 0.5% on the day, and the Nasdaq rallying by around 1%. That said, it was again another incredibly choppy day out there, not only in the equity space but in terms of financial markets more broadly. On an intraday basis, the S&P 500 was up by about 1.75% in the aftermath of the US CPI figures, and then at one point during the afternoon those gains faded all the way back down to the flat line once again. And despite actually closing in the green, we again see futures taking a little bit of a leg lower this morning. And I think it's, if you are a bull, if you are a dip buyer or a potential dip buyer, I think it's very, very concerning indeed that this seems to be a market that just cannot hold on to any gains at the moment. Rallies are being sold into very quickly and very aggressively. And of course, we remain below the 200-day moving average. And I think that's a bit of a sign that in the short term, at least, given the prevailing degree of uncertainty, particularly on the issue of trade, the path of least resistance probably does lead to the downside, with rally sellers having the upper hand over dip buyers, at least for now. In terms of that US inflation data, then, it was slightly cooler than expected across the board, with both headline and core prices rising by 0.2% on a month-on-month basis. Looking at an annual basis, headline inflation rose by 2.8%, down from the 3% that we saw in Jan, while core inflation rose by 3.1%, down from the 3.3% that we saw in Jan, and also the slowest pace since early 2021. Of course, it is worth noting that despite those figures being better than expected, they're not going to materially shift the view in terms of what the FOMC are likely to be doing next week. The Fed will almost certainly be keeping the Fed funds rate unchanged at their meeting next Wednesday, and also offering little by way of new guidance to rock the boat. Nevertheless, despite the cooler than expected CPI numbers, we did see some selling pressure across the Treasury curve, with two-year yields rising about 5 basis points on the day to 4%. While the 10-year rose about 3 basis points and poked its head above 4.3%. That in turn did lead to some modest dollar demand, with the dollar index recovering to around 103.5, which is broadly where we open up this morning. And in turn, that has seen other G10s pressure just a little bit. In news that will please Ryan, euro dollar has come back below the 109 figure, while cable has retreated from the overnight highs, which were around 129.75. In terms of other bits and bobs from yesterday, we had, of course, well, the day had a Y in it, so we had another rambling press appearance from the president, Donald Trump. He was talking specifically about the EU. He was actually meeting the Irish Taoiseach yesterday, the Irish Prime Minister. He was saying that the EU have been very tough on the United States, and that the United States will retaliate or respond to the counter tariffs that the EU imposed yesterday on US steel and aluminium imports. Trump also then kind of just went off on a bit of a tangent, to be completely honest with you. He was talking about how he is very happy that oil is down. WTI crude actually traded 2.5% higher yesterday, but obviously he didn't notice that. He was also talking about April the 2nd, again, touting how that is going to be the big day for tariffs when the reciprocal measures are imposed. He was saying that there's going to be, and I quote here, very little flexibility on that front. And he was just reiterating that those reciprocal tariffs are going to go into place. Nothing really fresh here. It was more just a kind of reiteration of what Trump has been saying recently. He was also chatting geopolitics. Trump was saying that people, he didn't say who, but people are on their way to Russia as he spoke yesterday. So presumably they are now there in the hope that they can get Russia to agree to that truce that Ukraine have signed up to. On that note, Bloomberg sources reported yesterday that Russian President Putin is likely to eventually agree to this truce, but on his own terms. Effectively, these reports were along the lines of because things seem to be going better for Russia on the battlefield at the moment, Putin is going to try and delay agreeing to a truce for as long as is possible in order to secure as favourable terms as possible for those in Moscow. Again, reiterating that Putin is not in favour of any NATO peacekeepers in Ukraine, and there was also talk that a condition for Putin to sign up to this truce would be for Western nations to stop their supply of weapons to Ukraine. Otherwise, he wouldn't be signing up. So it does look like there is still some distance between the two sides on that front. In terms of other bits and bobs from yesterday, we had a policy decision from Canada. The Bank of Canada delivering a 25 basis point rate cut to 2.75%, bang in line with expectations. They did note that they will proceed carefully with any further rate changes, so they're not really pre-committing to anything, and obviously they can't, given the situation in Canada with the tariffs and how frequently they change almost on the hour, every hour. The BOC, though, did warn that the economic hit may be severe if those tariffs are broad-based and prolonged. I wonder how long it took their army of PhD economists to come up with that one. In sticking with central banking, Bloomberg confirming Wall Street Journal reports from Tuesday that the Fed's Bowman is likely to take over as vice chair for supervision. That indeed was then confirmed later on by White House officials as the day progressed. And just to finish off with a couple of stories in the tech space. Firstly, Apple. You'll recall that, well, I say you'll recall, I can't actually remember what it's called now, but the government here in the UK, a few weeks ago, they effectively they were trying to build a backdoor into Apple's iCloud backups, and Apple had to pull some of their encrypted services from the UK. Apple are going to lodge an appeal against that in the UK courts, and that is due to take place on Friday, according to BBC. And lastly, sticking with the tech sector, Microsoft, the FTC, they actually announced this antitrust probe into Microsoft. I think it was towards the back end of last year. There were some hopes that under Trump that probe may be dropped. It turns out that is not going to happen. The FTC are continuing with that probe into AI, cloud, and software sales at Microsoft, and that the next steps in that probe will be decided in short order by the new FTC chair. So perhaps one to watch there. Also, I think it's interesting because we kind of assumed, perhaps naively, that Trump coming in pro-business, he's got all the tech CEOs on his side. He might cast a lot of this away. Doesn't look like that's going to happen. So maybe a bit of a narrative shift there, as well as the narrative has also shifted around the idea of a Trump put in the equity space, of course. But for now, that's your lot from me.
Fantastic, Mr. Michael Brown. Thank you very much. So just a few headlines from Zach's always awesome overnight news roundup. So first off, U.S. government funding at risk. Senate Minority Leader Chuck Schumer signals that Democrats will block the Republican-led funding bill, risking a government shutdown by Saturday midnight.
If
One
I
thing to
had a
say,
pound,
right. So do you know what I was about to say? Well, long-term listeners will know that me and Michael Brown are very anti against any hype regarding this subject. Even if they do shut down, which is very unlikely, that does not mean the US will default on debt, which and that the usual suspects will come out and start saying that. If you see anyone saying that, avoid them at all costs because they're talking absolute bollocks. Um, am I right or am
to
I
put it
wrong?
technically, yes, you're absolutely spot on.
Right. But it happens every single time and it's so annoying. Anyway, Republican tax cuts. Senate Republicans propose 5 trillion, well, 5+ trillion with a T in tax cuts over a decade. This exceeds Trump's expiring 3.8 trillion tax cut package. That's according to the Wall Street Journal. In terms of markets and consumer signals, US junk bond spreads climbed to a 6 month high of 3.22 percentage points, reflecting concerns over slowing growth. Wall Street Journal profiles a weakening US consumer with tariffs, inflation, recession fears curbing spending across the income levels. CEOs privately criticized Trump's economic policies. I think we all are, and not so privately, especially tariffs, but remain publicly silent. Okay. 44% would speak only if stocks dropped 20%. That's according to the Wall Street Journal. JP Morgan says the worst of the equity correction may be over. Oh, God. Citing calmer credit markets. Senate Democrat departures. Senators Shaheen, Peters, and Smith won't seek re election in 2026, dimming the Democrats' future Senate outlook. In terms of fentanyl seizures, they're down apparently, lowest levels at the US Mexico border since December 2001, a
Well,
significant drop since January.
so I was just going to say, if you, I don't know who put the stats out, but if you're the Mexicans putting those stats out, you're not going to say they're up, given the mood Trump's in, are
Also,
you?
also, when I first saw this, I was like, well, if the seizures are down, does that mean they're just letting more through?
Yeah,
I mean, I'm all for
just
manipulating
open the
numbers.
gate and go for it.
Seizures are at zero.
Yeah.
Manhattan rents, they've hit a record in February as bidding wars apparently are striking out across a quarter of all deals. The Bank of Japan Governor Ueda highlighting optimism on the consumption and reiterated the BOG's desire to shrink its too big balance sheet. Japan's finance minister says wages, not weak yen, are now driving inflation, but can't rule out a return to deflation. Thanks for that. Major union groups, the UA's Zen posted 5.37% wage hikes for full-time staff. China emphasizes tech and bonds. Delegates at the two sessions vow heavier investment in high-end computing and chip self-sufficiency. China's bond sell-off offers foreign investors opportunities in short-term yuan uh, dom- denominated debt, inadvertently supporting the currency. God. Hong Kong Exchange considering lowering the minimum trade units for expensive stocks to boost liquidity. In Europe, France's industry minister pushes the EU to strengthen safeguards and expand state aid for industries facing subsidized competition. Germany's parliament holds first reading on a multi party defence spending proposal, with final votes expected next Tuesday. ECB's Nagel says US tariffs on the EU could push Germany into recession. Oh, I think that was the least of the reasons why they were going into recession, but fair enough.
Also,
Uh,
talk about stating the fucking obvious.
yeah, right. Um, Also, water is wet. Uh, Startup funding in Germany reached 7 billion in 2024, though fewer deals signal larger average investments. In terms of UK and Canada, UK RICS survey shows that housing market hit its slowest pace in a year, with further weakness likely. Bank of Canada's Macklem reveals the bank briefly considered holding rates at 3% amid tariff uncertainty, before opting for another cut. In the Asia Pacific trade and rates, South Korea acting President Choi worries that Trump's trade moves may target South Korea next. Vietnam's trade chief heads to the US to, quote, reset ties with the Trump administration. What else have we got? India's inflation eased to a 7-month low in February, aligning with the RBI's target. Precious metal outlook. UBS sees gold hitting $3,100 an ounce by year end, citing stagflation, geopolitics, and inflation. Macquarie forecasts a possible spike to 3,500 in Q3. What else we got here? Citigroup sees prices in copper hitting $10,000 a ton. And in just finally for me, some geopolitics news. The G7, well, I guess it's the F7 because it's the Foreign Ministers Association, meeting in Canada on Thursday amid heightened tensions between the US and allies. In terms of Russia and Ukraine, the Kremlin says President Putin may comment on possible Ukraine ceasefire today at some point, so keep an eye on the news wires for that. Poland's president urges the US to station nuclear warheads in Polish territory. NATO Secretary General Rutte meets Trump today at some point, although nothing decided and nothing ruled out. And finally, regarding Taiwan, the president of Taiwan is to let military tribunals operate in peacetime, limiting certain Chinese exchanges. And that's it for me. Back to you in the studio.
Good stuff. Thank you, Ryan. The longer this show goes on, the more likely I am to keel over, I think, how bloody unbearable it is in here. Anyway, in terms of today, assuming that I managed to survive, there are a few bits and bobs on the data docket, although I will admit that most of these are sort of second-tier releases that are unlikely to be massively market-moving on their own. Famous last words. Kicking things off at 10 o'clock this morning, we have the January industrial production data out of the Eurozone. Production seen rising by 0.6% on the month to start the year. That would be a rebound from the 1% decline that we saw in December at the back end of 2024. Moving to the United States, we have a couple of releases due at 12:30, of course, due to the time change. The first of those is February's PPI figures. Producer prices seen having risen by 3.3% on an annual basis in February. That would be below the 3.5% that we saw in January. And of course, PPI is worth watching as it is a key input into the modelling for the PCE metrics, which are, of course, the Fed's preferred inflation gauge and will be due out in about 2.5 weeks' time. Also at 12:30 today, we have the weekly jobless claims data out of the United States. Initial claims, they are seen pretty much unchanged at 225,000 in the week to the 8th of March. Continuing claims, they are seen falling to 1.888 million, down from 1.897 million. And of course, that is for the week ending the 1st of March. It is worth noting that neither of those prints coincide with the survey week for the March non-farm payrolls survey. In terms of other bits and bobs to keep an eye on today, there are a whole ridiculous host of ECB speakers on the calendar. We're due to hear from Vilroy, Nagel, Holtzman, De Guindos, Rain, and McClough, among others, as we move through the trading day ahead. And last but by no means least, we do have a 30-year auction out of the United States today. Yesterday's 10-year sale stopped through the when issued by 0.5 basis points, and at 5 o'clock this afternoon, there will be $22 billion worth of 30-year bonds being sold off. And that is your lot from me this morning. And yes, Paul Quattro, that is a very representative gif of how I am this morning, if anyone's seen that.
Well, thank you for sitting through this while sweating your tits off. One thing to, technical term. One thing to note, I guess, whilst we've been on air, apparently it's been reported that the a US envoy Witkoff, his plane has crossed the Russian border, so perhaps.
Sorry, I thought you were going to say crashed then.
No, crossed the Russian border, so potentially we'll be getting some Russia-US Ukraine peace headlines crossing the wires at some point in the very near future. But regardless of that, keep an eye on that. Well, this way everyone needs to register on to PIQ Week. You'll see it most likely before anywhere else. But Mr. Michael Brown, thank you so much as always for being the hostess with the mostess. Listeners, thank you so much for tuning in. And yeah, we'll see you tomorrow. Keep it tight.
We will indeed. Bye for now.